into we're going to be quickly moved into like some breakout rooms, you know, we're creating about 4 breakout rooms. So it's just going to be an activity quickly for 10 minutes. The question is already in here. Okay, you have a question?
Okay. Yes. Thank you. My name is Victor Simon. Please, I want you to explain more between the government factor and the political factor of the external environment.
Okay.
Did you get my question?
Yes, I do. So when we talk about the government, you know, we have this very interesting social studies definition of government as the people, for the people, by the people, whatnot information. Now, the government with the people who are serving us are necessarily different from the political factor. So the government is part of politics, but the political factor is necessarily not just the government, because we have like different political factors, right? So the political factor has to do with those political arms that have to dwell. So people know a particular political party or a particular political system for probably something. So let's say political party A is known to be more infrastructurally driven. So it means that when political A is in position of authority, they're going to look more into infrastructure, whereas political B is more agriculturally inclined. So they talk more about agriculture. You know, the propaganda tells you more that, oh, agriculture, we're going to do this in our agriculture, that we're going to do that in agriculture, we're going to, you know, improve agriculture. Our Bank of Agriculture is going to be giving ₦1 million to every young Nigeria that applies for loan or grants. We're going to ensure this. Then we have political C, who is going to say, oh, political C wants to bring in more investment. We're going to bring in investors. So we're telling all our entrepreneurs that don't worry, investors are coming in. Now, these are different political systems that have different political addresses. The focus of every political system is different, right? So it's important to know, and that's why it's important that everyone, you know, exercise the authority in ensuring that a political system is favorable to the interest of everyone. And the political system is able to deliver home what we need as a people. So when you're thinking political factor, they're thinking this particular political system, what do they drive? If they're not going to drive investment, if they're not going to drive advancement of agriculture, my business is going to suffer. If they're not going to drive infrastructure, my business will suffer, right? So those are political factors. So it means that political system comes in and you already understand the factors that reign in that political system. For example, a particular political system comes in place and then you hear things like stopping importation, restrictions in importations of rice. Well, it favors you as a rice production farmer, because when there's restriction in importation of rice, it means that the price of foreign rice that we have increase. The average Nigerian is going to look for getting rice internally from you, who is making rice. Another political system could come and say, oh, no, restricting importation of rice is trash, and then cancels that rule. And then importation of rice is back on, and the importation becomes cheaper. Guess what? I'm going to go for the foreign rice because I feel like I am not going to have the problem I have with the foreign rice that I have with the local rice. Once again, that is why it's important for you to do your due diligence. Don't just come in to say you're a business person, entrepreneur. We should be have solidarity for one another when you're not producing up to standard. So you need to produce up to standard. So I could see your rice and I'm like, why get a foreign rice when this particular rice actually gives me the same experience that I have with foreign rice? So that is a political factor. Then governments have to do with your, you know, the bigger space, the people who make all the authorities in the House of Reps, Assemblies, Senate, and all that, which are a combination of different political systems. Did I answer the questions?
Yes, perfectly.
Okay, great. Thank you. So yes, well, we've taken out on our time for this activity, But okay, because of the time factor, we might as well just, have this activity in here. We might not be having the breakout again because we've like taken out on the time that we needed to do this exercise. So what we're going to do in here for this breakout activity, you can see the question in there. Please, I want everyone who can contribute to contribute. Just wave, right? When I see your hands on the wave, I'm going to mention, so we don't have everybody speaking and nobody speaking. All right. So the activity says the CEO of Multiverse, made a sole decision to invest in oranges, like of taking of orange from Ibadan to Abuja market. He invested 2 million naira in this business, but 6 months into the investment, the company is in debt. What went wrong? So we've been talking about business process. We've spoken about the different chains involved. We've spoken about the different factors. We've spoken about internal and external environment. We've spoken about the human capacity and how it's needed in a business. We've spoken about the requirement for this capacity. We understand what business operation is and what administration is. So I want to be sure that we're all following through this. So we need your response as quick as possible. Okay, Abdul Quadri.
Good morning. My name is Abdul Quadri from PharmMedic.
Hi, good morning. Okay. Yes, you can answer.
Yeah, thank you very much for this. I feel the mistake this person made is he didn't check the distance between these two places, where he's going to purchase his oranges and where he's going to sell. Because the logistics alone is going to cost a lot, and that can run any business today.
Okay. Thank you very much. So Abdul Quadri just said he didn't, do a proper feasibility study on the location, because the location is really far from so he's going to spend a higher money on logistic. Okay, Ochuko. Yeah, you can quickly unmute yourself.
Good morning.
Hi.
Yeah, I'm Roland from Jayland Farms. From my own observation, what the CEO did wrong was, first of all, he didn't consider there was no proper business plan. And aside that, he didn't consider the external factor, the external environment, because if you look very well, Benue State is closer to Abuja than Ibadan. And Benue State are actually the major producers of orange. So it will definitely have higher competition from Benue states. So that is what one of the factors he didn't think before going into that investment.
Excellent. Thank you. Okay, so someone on the chat panel, I think Steven said, okay, I think the location was a factor. Why not from Benue? Exactly. Why not from Benue, right? Okay, we have Elia Concept.
Okay, I actually wanted to say the same thing, but also Abuja has more oranges compared to Ibadan. So why would I bring something that distance all the way down to a place where they already have this thing and they are going to want to buy it lesser? So I would want to actually source for it where it's even cheaper compared to what is available in Abuja, so that even when I'm getting it down here, even with all the cost and everything, I can still sell it at a reasonable price and then make profit.
Awesome, excellent, thank you. Okay, we have Ogundairo, I think Ayobami.
Yeah, apart from logistics, what I feel also is the long distance, which will actually affect and oranges are perishable goods. So a certain percentage, the larger percentage of the oranges would have gotten spoiled before they actually make their way down to Abuja for sales.
Excellent. So someone on the chat here, I think Raf from Green Agro said maybe he didn't do a proper market survey to understand how the market in Abuja works. Why not buy from Benue? Well, everybody's saying why not buy from Benue, right? Okay, we have Ayolua.
Hello, good morning once again.
Hello, good morning.
Apart from all, everybody have said the right thing, but another thing we need to that he didn't consider is that I think he didn't get a proper professional advice. Because one, how can you, in Benue State, we have a lot of varieties, even in Bonu, we have a lot, Abuja, we have varieties of very good orange. They are more watery, something that is hybrid. And you just get to, because maybe somebody just gave me a cheaper price at Ibadan, maybe that's what enticing, but it not do its proper homework, because even orange is a perishable item. Before you can carry it from there, and two, the logistic, the price of it, plus all those roadblocks and other people that will stop them on the road. Because I remember while I was working in one of these manufacturing companies some years back, I know how much we pay to take something from Ibadan to the northern part. You even give them extra money to the transporter in order to settle the law enforcement agent on the road. So I believe these are some of the things that cost it, because it's going to be at high cost for him, even if you get it far cheaper in Ibadan than in northern state, which I know is not possible, because things like oranges and other fruit items are more far cheaper in the northern state. Thank you.
Excellent. Thank you very much. So Chinaso on the chat
said
hello. A lot.
My data is going down. Yeah, hello.
Yeah, we can hear you speaking. Mark, are you trying to say something?
Okay, yes. Yes, I'm trying to say something. My question is, it's all well and good. We're saying we can get the oranges from Benue, which is obviously closer geographically. But how do we know this gentleman doesn't need that particular orange from Ibadan? Because maybe that's probably the only place that does the oranges. So this is what I'm saying. I think we actually need more data in terms of, for example, and this is the key question we should be asking, why did he buy it from Ibadan to supply in Abuja? If we can have that reason, then maybe we can actually make a better, more informed decision, because we can make all sorts of assumptions, we can make all sorts of suggestions, but that's based on our own personal experience, and our own personal assumptions. So if, for example, he had to buy that particular orange from Ibadan, and you can't get it from Benue, then you cannot blame him for getting it from Ibadan, even though it's geographically longer. You understand? If he has the experience in selling oranges to a particular client in Abuja, then again, there has to be reasons why. That's all I'm simply saying.
Okay, great. Mark, that was like a very good opinion as well, but I think the activity already, gives us like a line of focus. So clearly the CEO of Multiverse Farm made a decision to buy from Ibadan to Abuja, which is important to ask, like, why are we buying from Ibadan? But the question is, discuss what went wrong, because he invested 2 million naira, and in 6 months, the company is in debt. I mean, they're not making profits. So what are the possibility of things that would have gone wrong? Having, spoken with all the things that we've learned all through the class. So Chinoso on the chat panel quickly said, a lot could have happened between Ibadan to Abuja. Vehicle breakdown, accidents, he did not insure his goods. So, all of these things are factors. So I'm really excited that we're, thinking about some of these factors that could hinder a successful business. The vehicle could have broken down. It's possible he didn't insure his goods. So if the goods get spoiled, or probably in the case of an accident, he's going to get loss of his money. And then Rav Green Agro said, could be he got funding for the project from a greedy loan shark and cut throat interest and short tenure that he couldn't cope with. Okay, this is really exciting. So, probably he got the money from someone, and at the end of the day, he can meet up with the interest rates, right? And that's why in 6 months they're in debt. Okay, Console.
Okay, good morning, everybody.
Hi, good morning.
Hi, see, based on the what is written here, that is the activity. First of all, I would say the CEO did not make a proper feasibility study of the business, of the market. And then he taking a sole decision, that is he has people that he's working with, but he did not consult them on that kind of business move to make, because the activity said sole decision. That is to say, he decided to do what came to his mind without considering the opinion of other people. And then having not also maybe done a proper feasibility study of the market and how that could end up. For me, that is a major point that contributed to his downfall.
Perfect.
Thank you.
Perfect. I think this is going to be our last contributor for today. Thank you all who really contributed. Ella said there are various varieties of oranges in northern parts of Nigeria. There is no better species in Ibadan that can't be grown in the north. Well, a lot of factors could be the reason why he went to the north, but I just love what Console said. You know, I was waiting in for someone who was going to take cognizance of the word sole decision. Because when we were speaking earlier of the business administration, we spoke extensively about the people who make up the administration. So the CEO, we have like the internal, let's say investors, we have stakeholders. They're like different people, right? The accountants, the farm accountants, the manager, the operations manager. Like, it's not just the CEO who makes up the business administration. It's not one person. But then it's now written here that he's the CEO of Multiverse Farm. But because he's the CEO, he has the reason, he can actually make decisions. But in this case, he made a sole decision. And the sole decision flopped. And that's what we're discussing, right? Yes, okay. I think Feli said for the purpose of learning, both external and internal factors could be referred to as prevailing factors for SMEs. Beautiful, thank you. I'm glad that we all, you know, are getting in here. The CEO didn't get a viable plan. You don't make a sole decision. So if proper, like everyone has said clearly, if proper feasibility study was done, possibly they would have made better decisions of where to make together oranges from. Now, if possible that there is a particular orange type species that are in just Ibadan alone, with better proper planning, you would most likely have gone to let's divide this orange type, get a particular quantity from Ibadan, most likely a smaller quantity, test the market. Sure, know all the pros and cons that are involved in the business. You know, someone says something that is possible that the vehicle broke down, the distance from Ibadan to Abuja is long, oranges are perishable, so it's possible that the vehicle break down for longer than 1 day because oranges are perishable, and they're going to spoil before they even get to Abuja, which is a loss. And if he did not insure his oranges, if in case of accident and something happened, his money is gone. He'll loses everything, right? And you need to be sure to have understand, like you need to understand the peculiarity of your business. So we had earlier shared about this environment. You need to understand the internal factors. You need to understand your external factors. You need to understand what are taxes like in Ibadan. How high is the taxes in Ibadan compared to the taxes in Abuja? So when I'm going to buy oranges from Abuja, from Ibadan, am I thinking about how much is going to cost me joining the Orange Farm Union in Ibadan as compared to the Orange Farm Union in Benue, or most likely in Kogi, right? So these are like factors that need to be put in place. These are environmental factors. These are governmental factors that need to be put in place. What is like the socio-cultural factor in Ibadan? So Ibadan, what is like the price for the people in the farm who have to, you know, pluck the orange and, you know, put it up as compared to the labor cost. So the labor cost in Ibadan, how much is the labor cost in Ibadan as compared to the labor cost in maybe in a place like, let's say, Benue State, or probably Taraba, or maybe Jos, So when you think about all these things which are needed in decision making, because if a proper investment portfolio was investigated concerning this decision, we would have seen that at the end of the day, just the same way we started, discussing all of the things that possibly could have gone wrong, we should have been able to say, oh, if we are going into this investment, yes, also said there's higher logistics versus lower profit. Would have been able to see what do we want to gain at the end of the day. Do we just want to sell a particular type of orange, or we want to make profit, or we want to break even? Now, into the class, we understand what it means to break even in a business. So first of all, sole decision, no. Dear entrepreneurs, dear CEOs, please, as much as you have the final authority, please seek counsel. Do your proper study, do your proper feasibility study, do your proper analysis, do your proper geographical reading. Ensure that you've been able to properly investigate the business you want to invest in. You need to be able to have understood every pro and con. And when you're starting, start small. Second problem here wasn't the fact that he made a sole decision, was the fact that he invested 2 million naira in a business that you just started, that you made a sole decision about. You had not even test run it before, and you invested 2 million naira in that business. In fact, 6 months was even a long time. They should most likely have been bankrupt from the second month. Because you need to be able to start small when you're doing what you're testing. You cannot just test a new business environment with 2 million naira when you don't have money. And like someone said, it's possible that he had loaned the money and he can meet up to the loan. So please, it is important for business environment. Do not neglect your internal and external factor. Do not neglect your administration when it comes to decision making. Investigate properly. It is really important. And well, for all of you who could care, this is a true life story. And yeah, the CEO actually invested 2 million naira and we lost the money in 6 months. I ran their business plan, so it wasn't like they didn't have a good business plan. There was a good business plan. This was a sole decision of a CEO, and it ran to the loss of the company. And well, the company currently is struggling to come up right now. So we're going to quickly move forward and then talk about farm record keeping. I'm sure every one of us is familiar with farm record keeping. So basically, farm record keeping is important. Your business might not be a farm. Whatever business you're doing, your agricultural business, in whatever sphere, keeping record is important. It's important to have a blueprint. It's important to get your records done, because your records help you in making proper decisions. So for example, Multiverse Farm, trust me, with a proper record keeping, they would never invest 2 million naira in a new business ground. The CEO will never make that mistake again because he clearly suffered for it. When you keep record is important because it helps you plan, it helps you make decisions that helps your operations. And it's a beautiful practice, please, no matter how small your business is. It is wrong. Here I wrote, it is illegal not to keep records. You need to keep records. When your business begins to grow, that's the reason why businesses audit. The essence of audit is to be able to track the records, is to be able to understand what was the income, the expenditure. And the beautiful part about tracking is that when you track, it helps for your better planning. You're able to forecast, okay, so we've been seeing this growth level in the rice production farm over the past 2 years. We can forecast where this market is going to. Because you are able to keep records. You can manage your farm properly because you can see, oh, 3 years ago, we bought this particular machinery and we've been servicing them every 6 months. And then during the last servicing, the mechanics let us know that these particular machines are weak and it's important for us to change things. If you don't keep records, you would not remember. So you pick up your record books and you're saying, oh yes, we're supposed to plan to change these things because we've been doing this for over these years. And in our last servicing, we were told that this particular machine is weak because you're keeping records. Now you need to buy particular fertilizers, and usually before you buy fertilizers every 2 weeks, and you're keeping records, and you're looking at the book and you realize that in the space of 2 weeks, you bought 3 bags of fertilizers. And you're wondering, no, what's going on? We usually use 1 fertilizer for 2 weeks. So why are we using 3 fertilizers for 2 weeks? Because you're keeping records, you can call the appropriate, department in charge of that, and you're questioning them. Clear question, someone needs to explain to me why over the last 2 weeks, we spent 3 fertilizers instead of 1. So they begin to tell you, oh, this is a problem. Oh, the fertilizers are not working. So we're actually putting in more. The fertilizers have gotten smaller. So we're actually doing this. So it helps you in decision making and for future management. So it is important as a business owner, please keep records. Beautifully, we've been talking a lot about technologies, how you can use different technologies for, your program, as well the technologies that can be used, tools for record keeping. Now, this Farmware's management system helps you, they can integrate your accounting, your payroll, your operations, your agronomy, and all of that into a platform. So you can easily, from the view, you can really see all there is going on in your operations. And you can see value because you're keeping records. Well, these are, I just put in like 3 different tools that are more like some important ones. We all know the Google Sheets, that's the Microsoft Offices. There is Word, Excel, Outlook, Access, and these are like different tools that you can use for record keeping. Excel is like a very good tool that you can use. You can use your Word in taking notes. You can use your PowerPoint in presenting for your team. You can use your Access in creating entity relationship and all what. You have your QuickBooks. Now, QuickBooks are used most time to, make your estimates, your invoices, and your pay. So you're able to integrate them. So in the view, you can get like your monthly QuickBook summary and see how much estimate was sent, how much invoices were sent, how much money came into your account, and you can, balance up your profit at the end of the day. Then there's traction. Traction basically give you an overview in the graph, the progress of your operations, your sales, and then your output. So you're able to just see them. There are many more technological tools that you can use for farm record keeping. But what is important is that you have to keep records. You must keep records. It is important to keep record. So when you keep record, it's important that there's something as well that you need to take note of. And that's like the farm to food price dynamics, if we're using this as an example. Now it could be any other thing. I wrote in 2 bullet points here that the price, I wrote in that the price is primarily it's a mechanism that links raw farm commodities through various levels of market system to the retail food product. So we understand what price really is. Price cannot be overemphasized. When you have a business, the success of the business and how large it's going to get to the end user is based on your price. The nature of the price transmits between farm and retail levels. We just spoke about the Ibadan, Abuja business venture. Trust me, the price of the oranges or the price of the bags of oranges from that particular farmer is going to differ from the price of the oranges of someone that is buying oranges from Benue because of the cost of logistics and all of the things that have to go into it. So in general, the retail price is important because it is competitive. You're not the only one. And at every stage of your market chain, you need to understand the price. Now, dynamic pricing is the pricing strategy that applies, it's variable. It means that you're not fixed to a price. And now this can be done through, decision making. It's not fixed. You can decide to say, oh, my business structure. I spoke about the steps to a successful price dynamics. Now, first, price dynamics clearly states that your business prices are not fixed. it's a business decision. I'm not saying go start your business and don't have a fixed price. I'm telling you that there's something called price dynamic that help business owners. They shuffle in their prices. I'm sure you've walked into a retail store before and they were most likely selling something for 1,900 naira. And then you walk in a week after and they're selling it for 1,850. And you're like, oh my God, it's cheaper today. Let me buy 3. And then you buy 3 instead of 1. Guess what the retailer needed you to do? They did a price dynamic metric so that you can buy more. The other week you come in and it's back to 1.9 and you're saying, thank God that the last time I bought 3, the next time I see it go down again. So there's a food store in Abuja and they usually have these sales every 3rd Wednesday of the month. Every 3rd Wednesday of the month, there's this beef pack that they sell for 2,000 naira. It's actually 1.5 kg for 2,000 naira, but ideally that 1 kg is 2,000 naira. But on that particular Wednesday, everybody wants to go and empty the shelf because you're getting a bigger size, 1.5 kg for that price. It's called price dynamics. So different businesses use price dynamics to ensure your businesses. Now, what are those things? One, you have to define your sale objective. What's the objective? If the objective is to acquire more customers, then your pricing has to be competitive. If your objective has to be to be the lowest people, so there is a business objective can say, my product is going to be the lowest in the market, even if it's by 99 cents. It means that even if it's by 99 kobo, your business is going to be worth the lowest in the market. It can be an objective. So you begin to build your pricing strategy to that objective. You choose your pricing method. How do I make my prices? Should I put a tag that has kobo in the essence of it? You know, the reason why people think ShopRite is cheaper than most of the stores is because they put in those 99. So for something that is like 100 naira, ShopRite is going to tell you is 99.99 because your mind is saying 99. You're like, oh, it's cheaper. The other guys are selling it for 100. Well, it's just a pricing method. Then you establish your pricing rules. And it's important to always evaluate and review. Don't say because you want to be the cheapest guy on the block. Every time prices have gone up, farm prices have gone up, market prices have gone up, you're still selling in that price because you want to be the cheapest guy on the block and you're not making profits. No, please, it's not a wise decision. Then we spoke earlier about breaking even. We're ending this session. Breaking even, guys, is important, especially for new business. How do you even know that you're breaking even? You know, it's easier for us to put in our business plan that our budget is $100,000 and we need $100,000, or probably your budget is like $99,000 and you're like, you need $100,000, so 100,000 naira, and I'm going to break even in 3 years. Who told you you're breaking even in 3 years? How do you know you're breaking even in 3 years? And you're just going to do a mini money move. If I sell this in year 1, if I sell that in year 2, if I sell this in year 3, I'll make this. Actually, there is something as yield in pricing for you to break even. So there is like a very short formula, and the formula is the total fixed cost divided by your production volume plus your variable cost. It gives you your break-even price. So you know that at this particular price, if I can sell this particular price for this number of production, I've broken even.
Can you repeat that, please?
Sorry, is that supposed to be addressed to me?
Yes, please. Can you repeat that?
Okay.
You said total fixed cost divided by what?
Your production volume. It's on your screen. Then I'm going to like explain it further. So the total fixed cost divided by your production volume plus your variable cost unit gives you your break-even sale price. So in that way, you can actually see how much in my sale price is going to make me break even. What is the number of production? What is the volume of production that I need to do to break even? So if you're telling your investor in your business plan that in 3 years you're going to break even, it's because you've done this already. and you know that what you need to produce in the next 3 years, for example, is 300 volumes of something. And you can say how many you're going to be selling by the month. And in 3 years, you'd have sold the 300 plus. So it means in 3 years, you break even in your price at which you start for. So the total fixed cost, the total fixed cost is like the startup cost that you need. So you're going to now divide it by the volume that you need to produce, plus the cost of your variable. It could be anything you're selling. It could be a farm product. It could be a farm software. It could be whatever. But one thing that you need to understand today is that the higher the production price, the lower the break-even. So sorry, the higher the production, the lower your break-even price become. So I did like a little explanation for us to understand this. And I said, the rabbit farm sells fresh rabbits for restaurants. I would like to introduce a new product, which is grilled rabbit feet, right? The company accountant has calculated the following cost. Now, the cost of the materials, like the cost of everything is going to need for us to have a grilled rabbit is 18 naira. Our direct labor, so our direct labor includes the guys in the farm that are going to, hunt the rabbits, they're going to do XYZ, is going to cost us 23 naira. And then the manufacturing cost for these supplies for us to be able to, grill the rabbit, package the rabbit, and then distribute is $8. When we calculate this cost together, it is $49, right? Now, the money that we have on investment to start up this business is 375,000 naira. So, I'm sorry, I made a mistake in here. I'd used this example before for a different business. So when we work into the total of what you have is 375,000 for what your investors is giving to you or what you've been able to raise. So if we say we want to sell 50,000 grilled rabbits now, what do we need to do? It's obvious that we have to divide 355. Don't forget that the formula says words. The formula said total fixed cost, which is 375,000 naira, divided by the production volume, and we're forecasting to produce 50,000 grilled rabbits, plus the variable cost per unit. Now, per unit of what the market value gives to us, the farm price gives to us is 49 naira. So if we do this math, it's going to give us 56 naira 50 cents. So if we want to break even for 375,000 naira that we've invested, it means that we need to sell one grilled rabbit for 56 naira 50 cents, and we need to sell 50,000 of it. So what you do as a business owner is divide your 50,000 into your marketing strategy. So when you usually have this in your management meeting in business administration, that this is what we need to do, this is what our sales need to look like, you give it to your sales team and your marketing team. Marketing team and sales team takes this information into business operations and get the team together, and you're like, let's break this into smaller components. Let's break this into 1 year. This could be our 1 year goal. This could be our 2 year goal. Let's divide it into smaller units, because the sum of a pie makes the whole. So break it down into achievable bits. So by the time you break down 50,000 grilled rabbits into smaller bits, like into the month, you would be able to say, okay, this is the target for the month. But at the end of the year, you've been able to break even with your 375,000 investments by selling a pack of your grilled rabbit for 56 naira 50 cents. And this will clear up the total summary for this session, and we are open for questions. Yes. If you have some questions, you need to draw us back. We have like few minutes because we've been having questions in the course of the training, and so I'm sure we'll be having less questions, but I don't know if we have some final questions, final thoughts you have some suggestions, you probably want to speak on something, you could just clearly do that now. If you do that, you could just raise your hand and ask the question. I'm not sure we have questions anymore, do we?
Okay, sorry. Good morning.
Hi.
This is, yes, Architect Edward Agi from Arch Systems and Associates. Please, I just want to ask and probably make a comment too. You know, startups, you know, don't have records because they are trying to, you know, establish themselves. So now, with everything said, it means it's very difficult for startups, you know, to get investment. It's very difficult for startups to get, you know, the required kind of funding, you know, because any investor comes and is expecting to see track record of progress, or, you know, may not find that. So what would be your advice to startups? Thank you.
Okay, first, I disagree with, just give me a minute. Someone is saying, please, a break-even price on the screen. Okay, I'll put that on the screen. So I disagree with you saying startup do not have like records to keep. You have records, you just have smaller records. So your records are your plans and business plans. Your records are, what do you need to do? What point are you at? What do you need to get to those points? Those are your records. Your records are your farm survey information. You're going into production, you've done your survey, you have the analysis for the things that you need, your machinery, your equipment. You know, you have itemized your equipment, you have like a pricing for them, or a forecasted pricing for them. Those are your records. You have the team that is needed for your startup, the standard team that is needed for your startup. But then again, you have like the ones that you have in the immediate as a startup. Those are your records. So your record necessarily is not 5 years of sales and profit and loss and investments and uninvestments. Records, from what we said earlier, record has to do with every detailing information that you need to keep about your business. The essence of farm record, like we said earlier, is it helps you in making business decisions. It helps you in forecasting, and then it helps you to see if you're making profit or not. So irrespective of how many years of business you've been in, or whether you just started today, or whether you're even yet to start, you should keep records, because those records are going to help you when you grow. I've heard a lot of successful business owners, you know, say in time that 20 years after, they were going through records that they had when they were just starting. Tony Elumelu said something last year during one of the TF seminars, and he said he was going through some of the decisions that they were, you know, they were making and that plan to make for future purposes. And he was going through them, and he clearly saw that they had achieved all of those decisions. Now, those were records that were kept. They were futuristic decisions. They were not decisions that they could have been made at that time. Trust me, and I'm sure some of those decisions were modified. Some of those decisions were added on. But the essence is you need to keep records. In case of your farm, you need to keep farm record. You need to keep record of when you're starting, what is the parameter of your farmland? What are the tools that you need in your farm? What are the equipments that you need in your farm? What are the manpower that you need in your farm? What are the technologies that you need in your farm? These are records that must be kept. Whether you're starting or you're yet to start, you must keep records. It is important in business. It helps your business growth.
Okay, Kumi, that's fine. That's fine.
Thank you.
Hello?
Okay.
Yeah. Hello. Good
Yes.
morning once again.
Hi.
Yeah, I remain with Simon of UTE Farm and Agro Business Services. In that farm record you're talking about, I just want to add something to it, to what you have already said. A kind of a contribution. There was a friend who is into fish farming. He called me that he has been having some challenges in his farm, and he's having a lot of mortalities. What I'm trying to explain is to give you a kind of make some explanation why farm record is important. Even as a startup, there are people that do have the farm record, but the only thing is that they don't keep it the way it's supposed to be. So when I got to the farm, I asked him about his farm record. He said he don't have record of the number of the fish he stocked. You only have the record of the feed and other expenses that they do in the farm. I told him no. You need to have that record. I asked him some certain questions. I discovered that he has been mixing or modeling so many things as regards to the management and day-to-day activities of the farm. So it was on that process that I had to guide him and then tell him what he needs to do, and even tell him about some medication which he needs to apply on the fish and some other things, so that he will now begin to have a better result. So what I'm saying in essence is that no matter what happens, no matter how the smaller the size of the farm or any business you are into, farm record is very, very necessary. And with that farm record, even in my own farm, there was a treatment I used sometime about last 3 days. So I saw a challenge in my farm or another farm I did for somebody. Some similar case came up. What I did was to trace that record I used 3 days ago. So when I got to that place, I looked at what I applied in the farm and I saw the medications I did. So what I did was to ask for that medication. So I couldn't get it, but I got a similar something that has the same properties of the things I needed to use in treating that farm. And I got it, and I got a good result. So it is very, very necessary to have farm records. Thank you.
Yes, thank you very much. Like that is totally a wonderful suggestion. So I think we're already signing off shortly. So there's a second part of the question that was earlier raised. I think I didn't address that, and that was on getting investors, especially when investors ask you for your records. Now, there are different forms of businesses. You have like your pre-stage, and you have like your developmental stage and all. No investor is going to be asking you for financial record of the last 1 year when you just started your business. What they're going to be asking you for is your business plan and your forecast. So what your strength would be on is to build a business plan and a forecast. So what they see is your understanding of the business and then the forecast at which you're going into, right? But if you've been existing for like 2 years and you've operated for 2 years, but you're looking to expand and you're meeting an investor, the investor can ask you for your records of the last 2 years because they want to be able to know your financial discipline, what were like your financial goals and struggles. And trust me, there are like flows that runs in businesses. So because the market is really dynamic, you cannot totally just say the market is going to be all acceptable all through the year, because there are seasons as well, especially for businesses that are particular with seasons. So if your business has operated for more than a year, you should have a definite record that you should present to your investors, because that helps your investors to know that, oh, this person, if you've been able to handle XY in the course of this 1 year, it means that you'll be able to handle something else, and this is what you're looking for to expand. If it's a freshly idea startup that is yet to start, your records are going to be your feasibility studies, you're going to be your analysis, you're going to be your budgets, you're going to be the equipment that you need, and your records are going to be the forecast. So the records that you need as a startup is different from the records that necessary for an already established and existing business. I believe that like clearly differentiates the two questions that you asked and answers that. So you need to have, it's important that you know to an extent, this record, because it's even for your own safety as the business owner. So someone asked in the session, I think this is going to be like the last question before, it said about the break-even point, is it that you have a set goal or set price, or there is a rule? So first, as a business owner, you clearly in your administration, once again, during your business management meeting, you're having a goal, a target that you're looking forward to. When you have your total fixed cost, which in another word could be your investment or the money, your startup cost, like the money you want to start up with. When you have that, your startup cost, do not just manipulate from your head. Your startup cost would have been an accumulation of all the breakdowns of things that you need to make that product. So like we explained using the rabbit production. So I would say 375,000 Naira was my startup cost. But then I broke down what I need to get my business running with 49 Naira. So I'm pitching to my investor and I'm telling my investor that the production price for me to give one grilled rabbit is 49 Naira. But I'm looking into expanding into the 6 geopolitical zones. So to expand, I need to be producing at least this particular figure. So I could say, let's just do a quick math and divide 50,000, which is like the progression for 1 year. So I could say 50,000 for 1 year divided by 12 months. And that is like 41, let's say 4,200. And 4,200 divided by 6 geopolitical area is like, let's say 700. So the target is to be able to deliver 700 grilled rabbits to each geopolitical zone monthly. Or we can just use that. So, or we can use 6 states. So if we say we're dividing it with 6 states, I want to expand into 6 states to this. So my forecast is I want to be able to deliver 694 rabbit feet to each state monthly. That's the reason why I'm asking for 375,000 Naira. Now, with this way, I'm able to produce 50,000 units of my sales. Now, how do I get the amount that I'm going to be selling each pack of my grilled rabbits? Ideally, do not mean that you cannot add up some other costs and most likely have a higher figure. We still have people that are going to, increase this figure, but you're trying to get your break-even price. Don't forget, is the break-even price that I'm trying to, let us know how to calculate your break-even price. So when you're talking to your investors, you understand when you tell them, I'm going to break even at this particular time, clearly, because if you give me 375,000 Naira and I'm dividing it by the 50,000 units that I intend to sell in a year, and I'm adding that to the 49 Naira, which is my production cost, it's going to give me 56 Naira 50 cents. So at the end of the year, I would have sold 50,000 units of grilled rabbits. I've gotten back this money. So that's why I say I break even after a year. But just saying I break even after a year seems vague. So you need to break it down. I can decide to say for a year, but not 50,000, it's going to be 100,000. If it's 100,000 units, the cost will go lower. If it's 20,000 units, the cost will go higher. If it's 5,000 units, the cost will go higher. So the essence of this break-even price is for you to understand how to break even in your business. When you invest a certain amount, and it's not just you getting money from a standard factor, it could even be from the own business. So your business has started and you started making profit and you need to expand. So you bring in some money to put into the expansion. How do you know that you're breaking even in that business? This is like the simple way to know that you've broken even. And you can actually calculate and forecast your breaking even. So you clearly know from the beginning that giving a 1-year metric or giving a 2-year metric, I'm able to break even from this investment. I'm sure that answers your question. Ochuko, I think Ochuko has this question. So I believe, okay, great. I believe this is like the last question. So we're going to have like, I'm sure you get a notification or an email for this, where it's important. This is everything we've spoken about, but this is now going to be tailored to your personal business. We've spoken about the essence of not just working alone as an individual. We've spoken about the need of having an administration in your business and not making sole decisions. So you don't make decisions like the CEO of Multiverse Farm, and how your internal and external factors, but there are different people who are in, in your business chain, from your manufacturing to your supply to marketing to management and all that. So identify key roles and responsibility that are key in your business. It's tailored to your business. This is not generic. So if you're in a rice farm, what are the key roles and responsibilities for personnel that are needed in your rice farm? If it's a fish farm, what are the roles that are needed? If it's an agro company, what are the things that are needed? But it's tailored to your business. This is just supposed to help you think more, especially as a startup, and begin to identify these roles and responsibilities. So just like Uche had asked earlier, when you have these roles and responsibilities in place, you're not just going to employ someone that is educated in the books and is not able to deliver, because roles and responsibilities are clearly defined and pointed out. So if you're coming in to work with me, you're going to understand these are your roles and responsibility, and I'm holding you accountable for the roles and responsibilities. So I'm sure this part of the assignment is clear. You would get a mail to these effects, and I'll just love you to have a wonderful time working with your team concerning it, and I'll just get your feedback later. This clearly brings us to the end of this session, and it's a wonderful session so far with us. I enjoyed our discussions, and I love the fact that every one of you participated in some form. So yes, you have a wonderful time, and once again, congratulations on your agro business, and I look forward to hearing about most of us as we do great in our country into exporting and importing other things. So I'll be leaving now. You all have a wonderful time. So over to you, Janila.
Thank you very much, Kome. This was a super interesting class. Thank you everyone for making this class super active. I'm always enjoying your questions because it just like bringing more insights. I put the post test on the group chat. I'll also put it here. We have a pitching session this afternoon by 2 or 3, I will confirm. It's 3 on the schedule, but I think because our facilitator is in a different time zone, we might have a bit of maybe an hour difference. I'm not very sure, but I will definitely update you all. And also from the due diligence team, they're informing me that some people didn't put the right information in their employee profile sheets, but I will also pass that across on the group chat. Thank you very much for being active participants on this call. Thank you very much, Kome, for this really amazing class. And I hope everyone has a nice day. Thank you.